Whirlpool India. We have Sunil A. D'Souza, who's Managing Director of the business, to talk about their numbers. Mr. D'Souza, it's great to have you on the show. Thanks very much for taking out the time. You've delivered a strong set of numbers this quarter. Break up your revenue growth for us in terms of which segments have aided earnings.
Before I come to breaking up the revenue growth, just wanted to highlight the numbers for the quarter. We delivered a 13% top line, and this is sequential basis 5, 14 and 24 in the last 3 financial years. This was a fairly tough quarter. The positive was that we were cycling the pre-GST jitters of last year, but the negatives were that it was a tough commodity currency as well as erratic weather in a seasonal market like India. And we did manage to not only grow the top line in a healthy manner, but deliver, I think, a decent set of results on the bottom line. So we grew our EBITDA by about 21% and EPS and PAT by about 24%. Now, as I mentioned, it was a tough commodity currency cycle, but more important than that, the impact was of the erratic summer, which was quite erratic in different parts of the country. So given that, the cooling portfolio, which is refrigerators and air conditioners, was slightly, we still had decent growth, but we saw stronger growth in the non-cooling categories because of the erratic summer. That said, we've continued our geographic and portfolio expansion, and that's the reason why we've seen overall 13% growth and growth across the portfolio.
So tell us, what kind of volume growth have you seen in the first quarter? Because you have been very optimistic, saying that you are targeting this double-digit volume growth going forward as well. Are you on target? What is it that we can hope and hear from you in the future quarters ahead?
See, as I've always said, India is a growth opportunity for Whirlpool globally, and Whirlpool as a corporation is focused on India. And the prime reason for existence of India in the Whirlpool portfolio is growth. So we have always maintained that we will target double-digit growth ahead of the industry and make sure we deliver a healthy bottom line. For the last quarter, we grew volume about 17 and value about 13. You've got to make adjustments for all the different movements that have happened on commodity currency, etc. And the mix shifts that have happened as we see more growth coming in from Tier 2, Tier 3 towns and more penetration growth with first-time buyers. That said, all parts of our portfolio are on track, and our plans are to make sure that we continuously boost the portfolio. We've always said that we will boost the portfolio. We're targeting one new launch, and it's an actual launch and not just a refresh sort of product. One new launch every 2 months. We've done that. Last quarter, we've launched our Wi-Fi connected ACs. We've launched dishwashers. We've launched a new range of premium refrigerators. We've launched a new range of top loaders, world-class top loaders, and we are on track for the rest of the year. So all in all, we are on track on what we've committed. We always said double-digit growth. It's 17% ahead of industry. Yes, we are ahead of industry, and healthy bottom lines.
What about margins? They have remained a bit flat on a yearly basis. Is that due to the currency depreciation? Can you, find comfort and cushion in the margins? The game in a growth market and an emerging market like India is to make sure you continue the top line, but continue to maintain margins. It's always a fine balance. But just to give you a perspective, for the last quarter, our factory margin was at a 30%, 30.2 if I'm not mistaken, which was the same as the same quarter last year and 2 percentage points better than the last quarter. And every single parameter on the bottom line that you see, whether it is EBITDA, which came in at a 15.4, or a PAT or EPS, everything is about a 1 to 1.2% better than where it was. So we've managed to deliver growth. We've managed to tackle the commodity currencies. Rupee was in the 75 odd range. Rupee was close to touching the 70 range. Oil was in the 75 range, and oil has a cascading impact across. I think the team did very well to balance these pieces. So Whirlpool as a company, we've operated in India for about the last 23 years, and we've seen these ups and downs of the cycles. As long as we maintain our strategic focus on what we want to do and tighten execution, I do think we can continue to deliver, again, just for repetition's sake, the double-digit growth ahead of industry and healthy bottom lines?
A very quick, take on the way how you see the trade war impact could have on the, on the companies which are currently importing or which are currently exporting from China to countries like India. The Indian market, in a sense, also is dominated by the Koreans and also by some of the Chinese manufacturers. What happens there if the trade war fear accelerates?
Okay, I would not try to speculate too much because there is too many moving parts on this trade wars. There is a phase 1, phase 2, phase 3, and I'm not sure what comes next. All that I would say from an overall business perspective, uncertainty on macroeconomic conditions is not the best environment to operate in. I would have preferred much more stability. That said, because of the pressure that the US puts on China or vice versa, I think if the game is played right, India could stand to win out there. But again, like I said, the game has to be played very smartly and the moves have to be anticipated well in advance. I'm not sure how this pans out. The only thing that we can brace for is there is going to be volatility. There is going to be an issue of supply chains as companies look around trying to figure out where to move around their supply chains at a global best cost basis. A lot of our components for our production comes out of China, whether it is compressors, motors, electronics, all these kind of things. One good news is that the yuan is depreciating in an equal range as the rupee as of now, and since most of our components are imported from China, so that's sort of solace when I look at the depreciating Indian rupee compared to the dollar. But like I said, I wouldn't speculate on where this is going. All that I would focus on is making sure that we are agile, nimble, we have the ability to move very quickly when we see trends moving across.
Leave it at that. Thanks very much for joining us and giving us those details about your business, and we wish you the very best for the future.